I'm excited to present and co-present this really interesting topic that uh, for many of you guys have who are new to us. We are a real estate investment company, but we also, and my background in real estate investing has been in multifamily and apartment buildings, but I also really love senior living, and I've gotten more into it. And Tozy Capital will go deeper into it the rest of the year and the foreseeable future. There's lots of great tailwinds for it from an investment perspective. But we're not here today to talk about any specific investment. We're not here today about pitching you a deal. We want to provide you an insight from our very own Mark Reisman on why we love senior living, what is senior living, and things to consider and how you compare it as investing in senior living. And just for a little bit of housekeeping, if you guys have any questions, which I highly encourage you guys to ask questions, use the Q&A. I'll interject Mark as we go along. Mark can focus on presenting this great investment class. I will focus on playing you guys and really playing the voice of the investor. And so, just please use the Q&A. And we will also provide our contact information in chat if anybody wants to reach out to us. And then at the end, a few hours from now, we'll probably get an email with our recording. Hi, my name is Eng Taing. I am CEO, founder of Tozy Capital. My background is in economics and finance. I have a varied background from investment banking to Peace Corps to analytics, and then most recently working at Siri and leading data science here. And the theme here is both a data pattern theme of understanding numbers and understanding metrics, but also I've been in real estate investor this whole time. And currently Tozy Capital has 150 million of assets under management, with almost the majority of that now going to be coming senior living. And I'd love to introduce Mark. Mark, introduce yourself.
Hey everybody, Mark Reisman here. And hey, a couple of decades ago, I graduated from UC Santa Barbara. I'm a gaucho. Worked at PwC in audit for 5 years. Eventually, I've always, like Eng, always invested in real estate. So I've been a landlord for most of this time since graduating. I do own a couple limited investments in some multifamily. And about 4 years ago, I found my way into senior living. So I worked at a company called Wind River, and they were a third-party manager based here in Dallas. I'm located in Dallas currently. And we had 32 properties over the course of my time there. Most of those were senior living. A couple of those were multifamily as well. But man, it was a blast. I had so much fun operating. I came in as the CFO shortly after I became the CEO. And then for about a year that I was also the chief operating officer.
And that's not a CEO of some 3-4 person company like Tozy Capital. It's a CEO of, I think, 500 people that you manage, private management company. I'm very excited to also, for those who don't know, Mark has joined Tozy Capital and brought his robust expertise in helping us lead acquisitions and asset management.
Yep. So it's been a lot of fun. I have a few case studies from my time when I was at Wind River, just to give you guys a little understanding of my experience. There was a portfolio of a few properties in Central Texas. They were assisted living, memory care, and they were full or close to full when we got them, but they weren't really making much money. And so we were able to cut costs and still actually lease it up further from there. Credit to my team who helped with it, but it was a really fun experience to be working with that portfolio. There was an assisted living memory care in Naples, Florida. Naples is one of the top markets in the country. If you want to retire in the retirement capital of the United States. Naples is your place. We weren't in this property for very long, but when we got it, it was had issues with the culture. We stepped in, we found a great team to help run the property at the property level, and very quickly stabilized it. We started seeing some positive lease up, and we didn't think it would sell right away, but sure enough, the owners got an offer on that very quickly, and the thing transacted. So, I think we had a good part to do with that. Finally, we had 6 independent living properties in the DFW area, and they all did really well. The average was 95, 96% occupied. And so, again, credit to the teams that worked in the properties. It was no easy task, but that was a fantastic portfolio to manage. So as Eng mentioned, we're going to go through a few different topics. And the first one is, why is senior living in the first place? Well, let's start with the demand. A lot of folks in the industry quote this number quite a bit. 10,000 people turn 65 every day. And 4,000 people a day turn 85. So what happened was, after World War II, people came back home and started making babies. So the baby boomers are now all turning, they're becoming 70 and older. And so that's a big demand driver. In addition, I'm going to talk a little bit about caregiving. I think that's kind of overlooked quite a bit when you talk about our industry, but I think it's very important. So currently, there's a ratio of about 7 family members who can care for older adults for every older adult. And that ratio in the next decade is going to fall to 4 to 1, which means there's going to be less people to take care of the older adults. So in summary here, there's a lot of different indicators pointing to demand increasing. And that is one reason why we like this industry. So talking more about caregivers, the act of caregiving, again, I'm talking about the family member taking care of their parents. When people aren't working, businesses lose money, so it's bad for the economy. In addition, it costs people about $500 billion when they don't go into work. So these stats here talk, more in detail about what it means. If you're working full time and you have to take care of someone, that all adds up to a lot of stress. You don't have time for yourself, and therefore caregiver burden is a real thing. So, with stress, your cortisol levels increase. It actually causes a lot of health issues for the family caregivers. The adult children is what we call them. So much that actually there is a 63% greater risk of death. So as people become more educated in the risks of the health risks of caregiving, I believe that that's going to continue to draw people into senior living. I think COVID really drew people into the stresses of taking care of people, and so that's fresh on people's minds. And in fact, we've seen over the last couple months with the vaccines rolling out, there's been, in all the properties we're looking at, there's a lot, great movement back into communities right now.
Yeah, I think one of the things I hear about here is because the adult children were staying at home, right? The adults 50 plus, because they, everyone was quarantined. They could take care of their parents, but what I'm hearing is that they are relieved for the most part that they don't have to carry that burden, that they can rely on professionals, that they can have a better community for their parents to live in. So I think it's a win-win. Yeah, and I mean, I just, I can't go into the importance enough about,
caregivers and the relief that they get to experience and what that can mean for us. So, so that's from the family perspective. Also, with the pandemic, I think people have a deeper understanding of what loneliness can do, especially if you already have, a family member who, is of age and maybe couldn't see their friends like they were used to. And so, this quote is from a doctor from UCLA, and what it means is loneliness just causes a lot of different health issues for those folks. Each condition in here, plus a lot that weren't mentioned, costs, for health benefits, health claims in the 10 to hundreds of billions of dollars a year. And so that's fiscally speaking, but on a family level, it's not fun to see a family member who's suffering from depression or having illness. In addition, people have a lifespan, right? Maybe you live to 70, 80, 90, but how long of that time are you actually healthy? So there's a difference when you start talking about health span, and we want to see people, we want to see the health span to be as close to the lifespan as possible. So I'll talk more about that in a little bit. These are more risks of loneliness. So for each of these conditions, you're talking about an increased risk of the condition when you're experiencing loneliness. And yep.
Oh, and sorry, and it's interesting that you bring out these, health risks. It's not like we're treating specifically for heart disease or stroke or depression, anxiety. It's the fact that we're providing a really nice community that people can have interactions on a daily basis. The caregivers, as well as their friends and colleagues from years ago, and their new neighbors. And it's, if you've ever been to one of these communities, it finally feels like community. And it's something that if I couldn't take care of my parents, because I'd be a terrible Asian son, probably with my parents today. But if I couldn't take care of them, I think I would love for them to have, community, because I do really agree that, the data shows that loneliness, social isolation is a very big health risk.
Yeah, and to expand on that a little bit, if your parents are living with you and there's a stressful situation at home with the caregiving, let's say that they do move into a community. Well, at that point, there's a burden off of the caregiver. There's a burden off of the older adult who moves into a community because they don't feel like a burden. And they're now, have the potential to have a lot of fun in one of these communities. So it's really a win-win. Mm-hmm. So that's really why senior living. Again, we think that there's, really great social reasons for this, social and health reasons, and that's going to continue and in fact expand as the next 2 or 3 decades. So, what is senior living? Well, it's not the nursing home that you guys may think of, from 20 years ago. There's actually a lot of different types of senior living, so I'll go through those pretty quickly. But first, I want to talk about the word acuity. So for senior living, acuity, if you're talking about low acuity, it means the resident doesn't need much help. They're, relatively independent. High acuity in senior living means they need a lot of help. And so it's actually opposite of the definition of acuity, but hey, that's how we call it in this industry. So you start with senior apartments, and those function just like multifamily. It just happens to be marketed to older adults. Active adult, you start to add activities. Independent living, there may be food, but still people are pretty independent. When you're looking at the property, they usually have full kitchens, or the higher acuity you get, maybe the kitchens go away. But assisted living, now you need help with meal prep, you don't, these folks, they don't like to go shopping. It's very difficult for them. And so that's where assisted living comes in. Memory care is a form of assisted living. It just takes more people to help care for people with memory issues. And then finally, you have skilled nursing, which effectively is a hospital. You get into all the bureaucracies and rules of hospitals. So at that point, you probably need help, being fed. So
for you can go back to my slide. Actually, no, go ahead. I see that you're next.
Yep. So this slide just talks more, it just reiterates what I was talking about. So at each level, you're adding in a component of service. Mm-hmm. Okay. So now operationally, when you think about multifamily, what are the operations? It's leasing and it's plant ops, maintenance. So senior apartments is just like that. When you start to move to active adult, you add an activity director. Then you add kitchen staff, assisted living. Now you start to add care staff. And there's different ratios based off of, again, how much care they need. These are general rules of thumb. Depends on the actual, people living at the community, could change from there. All right, so now looking at the amount of rent we're collecting for each of these types. If multifamily is in the $1,500 to $2,000 range, now you add in food, now you're looking at $2,000 to $2,500 for independent living. These are averages, so you'll see the full spectrum in all of these. But this data are averages from NICMAP, a popular industry source. Assisted living, the average gets up to 5,000, memory care, et cetera. When we're looking at investments for Tozy Capital, a lot of times we'll see rents that are less than this, and then that creates opportunity. It's very market specific, of course, but we'll identify opportunities to get closer to average. All right. Big picture marketing. There's different marketing for senior living is what you see for multifamily. And this slide is asset type correlation. So the takeaway from this slide is that senior living is on the right side. And so what that means is it doesn't really matter what's happening in the economy. I like to say senior living is recession resilient. So if the economy is taking a dip, well, we're not going to see as big of a dip in NOI as you would for, say, offices on the left side. Okay, that doesn't mean if the economy is doing well, hey, senior living is still doing well. If you're on, the takeaway again is that it's recession resilient.
One of the things that I want to add a little flavor on is I own a lot of these assets. GDP delinked. The way I like to think about it is people still need a place to live, so they're going to be renters regardless of what happens to the economy. They could be paying less rent. There could be moratoriums on it, but there'll still be renters. And as prices of houses goes up, there'll be more renters as people price out. People need a place, old folks need a place to be taken care of in a community. It's a needs-based asset, not a want-based asset. And I also like that senior living has typically longer leases. Mark, is it like 28 months, the average tenure or something north of that?
Yeah, 2 to 3 years.
2 to 3 years. Compare that to an apartment building that's usually 6 to 12 months. There's a lot of turnover every time. And for seniors, once you get in, I think they oftentimes prefer their friends as well, their loved ones if they're nearby. And it reminds me a little bit of self-storage, where self-storage also has long leases as long as you get out from the people, sort of the beginning folks. And then I also have retail shopping centers, which are very highly linked to GDP. And when COVID happens, businesses can go bust. And so, though that's the other opposite end of the spectrum, they do have potentially higher yields potentially, but obviously higher risk. So I really like this slide because I think when you think about diversification, you should think about how predictable your income streams are and how tied it is to the overall economy.
Yeah, and hey, folks that are retired, if they're living in one of our communities, there's a good chance they're not working, especially in assisted living. And so they, if they sold a house or just had enough savings, they're drawing from their savings rather than relying on a job. So if people are starting to lose jobs, there's a good chance that, they can still stay in place. There was a comment about if the economy's not doing good, people may live with kids instead. Yeah, that's true. That's why it's not recession proof. That's why we call it recession resilient. So we think it does better.
But remember, these seniors aren't working anymore. If you're looking at assisted living and memory care, they're typically over 80. And for the investments that we've done, for many of them, they're private pay investments, so they're not even tied to sort of government bureaucracy. But if they are tied to government, Medicaid does cover most of those expenses. For those who don't, we typically do a 3-year financial check on them so that we make sure that they can pay for those 3 years that they have left.
All right, so what makes a great senior living community? This looks pretty great, right? No, I'm kidding. So these are institutions, right? This is hospitals. I think this is what people used to think of, nursing home, senior living. And so really, those were facilities, and that's a dirty word in my language. We call them communities. And here's some examples. These are resorts. I mean, pretty awesome. By the way, the one on the left here, actually, this was my first experience with senior living. My grandma lived in this one in Sherman Oaks, the Villages, the Village. The one on the right here, this is actually the Latitude of Margaritaville. So pretty neat, Jimmy Buffett themed. Doesn't matter if you're a Jimmy Buffett fan or not, that looks pretty awesome. Does not look like senior living, does it? Quick shout out to this one next to Latitude. This is a new development in Woodland Hills called the Varial. I know the developers. Man, the interior looks amazing. I mean, these dining areas, who wouldn't want to live in one of these communities? But hey, right now I'm talking about what they look like. And the more important thing is, what people do inside the communities. Again, going back to the earlier slides, talking about loneliness, isolation. Well, in these communities, there's usually a great life enrichment program, also called activities. We like to refer to it as empowerment. People are doing physical activities, whether it's fitness, maybe it's gardening, other volunteering. These things often include some kind of physical activity. It's almost always social. And so that combination, people are going to expand their health span. So they're having more fun. This third act of their life is, could be their best act yet, right? They're not working, but they're doing what they want to do. And, all these things are proven, with studies to prolong people's lives and make them happier. So that's what senior living is. It's it's not the old nursing home. These are really neat communities. You add in the activity aspect, and it makes it desirable. You can think of them as a need-based product, but there's opportunity to make them want-based.
And we have a question from Rose. As humans, we crave connection. I totally agree. Isolation, whether it was a pandemic or product of aging related disability can take away from lifespan. Senior living programs can rejuvenate lost time. Mark, can you talk more about why connection in combination with attention to a balanced wellness is so overlooked in society, and how senior living is getting that vital message across to today's consumers?
Yeah, man, thank you, Rose. Rose and I have worked together for a little bit, and the the connection that being socialization, is so important to people, and really, it's what we strive to do. The good operators really, go that extra step to have that connection with the people. And so, you really can't underestimate the value of having that connection and being social.
And Mark, as you always tell me, it's always about the people. It's about the personnel. If you can go visit many communities, and if you can tell folks are happy there, you can tell the staff's happy, that resonates with the residents.
Yeah, exactly. During my time at Wind River, we took on 7 transitions where we brought on communities, and all of them had some kind of cultural issue. And the number one thing operators can do to help change the culture is to spend more time and attention with the people. And that's not just the residents. It's actually, very much spending time and supporting the staff, the teammates at the property. So, the connection doesn't just stop with the older adults. It's, with between the operator and the teammates as well. All right, so next we're going to go into what it's like to invest in senior living. So to start that off, we're going to talk about the supply and demand. And as you can see, this is another NICMAP data point. They're projecting a big supply shortage starting really in the next 5 years or so. So that's opportunity for investors, and I'm very excited about it. And this next slide, talking about construction starts, over the course of the last decade, we've had a lot of I guess a lot of construction. And so with COVID, there was a dip in construction, which means, hey, people are still aging at the same rate, but there's less product coming online. So now that things are opening up again, people are vaccinated, we're seeing a lot of opportunity, a lot of people moving into the projects we're looking
at. Before we move on, sorry, we have a guest ask in chat. If you can ask in Q&A, but I'll quickly answer your question. You asked for a senior living opportunity zone fund. Curious, do we have to hold for 10 years to pay 0 in taxes? So slightly separate from this entire topic, we do have an opportunity zone fund available, and it is senior living. And just highlight real quick for everybody who don't know, opportunity zone funds or opportunity zones in general allow you to defer your capital gains from sale of short and long-term stocks, your capital gains portion. So you only have to invest your gains, not rather your principal, as I'm answering that question. And then it allows you to defer it for 5.5 years until the end of 2026 and reduce by 10%, pay then at 10% less. And then you have to hold it for 10 years. You don't have to, if you don't hold it for 10 years, you get to pay taxes. But if you hold it for 10 years, you get the benefit of eliminating all future capital gains on that investment. Sorry, a little bit aside.
All right. Well, so going back to not talking about returns by asset class. So this slide compares senior living real estate to the other types of real estate. And as you can see with the black bar, that over the last 10 years, senior living has the second highest return after industrial. And that's consistent, through 3 years back. Hey, doesn't mean that, that's going to be the case going forward. We don't have crystal balls, but, looking at the data that we have, we think there's a good chance of it. And that's, one of the reasons why we like this a lot. Right. So now talking about operating margins by type. Basically, hey, multifamily, you're talking, roughly 50% operating margin. And for senior living, it's not much different. You're in the 40 to 50% range. So, we like that. For assisted living, yes, you're getting more rents, but you have more costs. So your operating margins shrink a little bit. We aim for between 30 and 35% operating margins. And finally, for skilled, we're always aiming for between 30 and 50%. Last year was rough. So we do think that will be turning around. There's always a pendulum, and I think that skilled is on that pendulum. All right, common cap rate. So cap rate is your NOI divided by the purchase price. And for multifamily, hey, there's a lot of people who invest in multifamily. And when there's more supply of cash going in, there's more demand for that asset, and therefore, and by the way, lower cap rate means higher value. So you're looking at, for Class A and B, between 3.5% and 5% cap rates. Senior living, it's a little bit higher. With the barriers to entry of senior living, there's less investors in it, and I think that's a big opportunity for us as well. We're looking at, when we're looking to invest, we're looking in the 7 to 12% cap rate range, and we're looking. The business plan is to figure out how we can get it down into the 6-7 range. Looking at historical cap rates, you can see pre-pandemic, there was a low. Again, that's a good thing. A low of 5.9% for senior living. And then thanks to the pandemic, I hate saying that, but the opportunity is cap rates have risen. So we're at 6.7% now. That is our investment opportunity. We don't get to see that. There's not too many of these events that go around. So unfortunately, this is one of the silver linings. All right, so when we're talking about unleveraged yields, that means the NOI, net operating income, divided by your investment, how much money you put into it. And as you can see, when you're on the left side, Class A at the top, the lowest risk is the lowest return, right? You get higher returns with higher risk. So your average for active adult, which is the least in operations here, has a 6.8% yield. And then as you move lower, yields go up. Same thing when you move to Class B and C, there's more risk with those. And so the yields tend to increase. So we really like B and C properties. There's a case for A every now and then as well. When we have an investment that we're going to present to you, certainly we'll have an explanation for which asset type we're looking at. And then finally, internal rate of return. I took CrowdStreet, right? For the last 2 months, I looked at all the deals they're pitching, and these are the average internal rates of return for these asset classes. Senior living, I believe, has the best potential here. We usually try to underwrite to 20% or more. There could be a reason why we do something that's less, but I'd say, our averages, and there were no senior living in the last couple months at CrowdStreet, so I didn't have that stat. But this is what we're looking at, 20%.
And it's interesting that, Mark, you don't really see a lot of senior living investments on CrowdStreet or any of these platforms. And this is, I believe, mostly for value add real estate. So obviously stabilized real estate versus value add versus new construction, all slightly different returns, risk profiles. But it's interesting that who actually owns a lot of these senior living. It's not like there's syndicators that go out and try to acquire senior living. I mean, we do, but there are definitely syndicators that go out and try to acquire multifamily because relatively multifamily is very familiar. Multifamily and I love multifamily. I'm going to do more multifamily. We have one coming up, but it's more accessible. And when you have any investment class or investment asset that is more accessible, that has a lower barrier to entry, you generally have more competition. That has pros and cons. That means that you can trade easier. You can sell it to somebody faster because there's lots of people wanting to buy it. But also there's so much capital chasing the same assets that generally what we've seen in the industry is that a compression of cap rates. Essentially, the returns on our investment have gone down over time, and it's not like it's 2015 anymore. So multifamily is a little bit, people always need a place to live. And I think I really like multifamily in the long run, but in some markets, it's definitely a little heated. And I believe senior living is just starting to get there. It's on its rise. So I'm very excited about being in this space. And another thing that what we find is and we have one asked question: will the shortage last? Once developers know these shortages, the thing with these senior living communities, sorry, is that the average age is 19 years. Doesn't sound that old, but there's been a lot. If you ever see a 19-year-old community versus a new community, it's very different because these are heavily used communities. It's not like apartment buildings where you can turn over the units. Uh, it's the whole look and feel, the ambiance, and all the community amenities that comes with it. And so the ones who can renovate and create the new sort of that sense of freshness and newness that comes with value add turnarounds or with new construction like what we've have in some value investments, you can command typically $1,000 rent premium. And these rents are very much more elastic and more, have bigger ranges than multifamily.
Yeah, and hey, I love the 19-year-old buildings. When you can walk in there, if the only thing you have to do is, update the interior or the exterior, that's pretty easy. Usually when that happens, there's also some kind of operational issue to fix as well. But that's the fun of senior living. And I think that's, to Eng's point, the great opportunity right now is the two good choices of getting something that needs updating and fixing, or developing new.
All right, let's go to Q&A.
Yeah.
Let's take up the screen off. Let's present our pretty faces.
Let's see here.
Stop recording. Okay. No, it's not. So we have a question about will investors see those higher returns, say 20 to 30% per year? So one thing that I think Mark is highlighting is that there are potentially higher returns, and this is one reason why we love going into senior living. But it's definitely the fact that operators are very important in this space. And when you have an owner and operator, like what we have with some Val deals, you can take more of the profits, and the operators do enjoy that. But when you typically have other more traditional investments where you hire, say, what Mark used to work at, you're looking to share a little bit more of that. But maybe you can add some color on sort of investment, value for investors.
Yeah, value for investors. So, are you asking about operationally or?
Yeah, so the high cash flow that investors, so that these communities provide, for your previous investments that you've worked on, what have you sort of been able to provide? And these are obviously mostly value add and other types of investments.
Yeah, so the properties that I operated, well, first is a broad scope of investors. A handful were, single owners or very small groups, maybe two or three investors. There were some private equity and there's nonprofit in there as well. A lot of those I inherited. I started working there and they were already operating. And so the plan was, hey, we made our annual budget and then we worked to execute on that budget. It had to do with, big focus on the people and on the operations and activities. And then again, for the 7 that we took over while I was there, it the number one thing again was going back to fixing the culture, supporting the people at the property, and really that balance with the investors and figuring out what we need to do that's within budget, right? To fix property. Sometimes some tough choices had to be made, but at the end of the day, we were able to accomplish a lot of it and at least have a plan in place. So did I answer the question?
Yeah, this is great. I mean, a lot of it, I think one reason why I like senior living is it's real estate, and all the tax benefits of real estate, but also it's a business. It's a high cash flowing operating business if you can manage people. And a lot of this space is about the people, about managing the cost of the people, managing the right combination of folks, having that culture that you're cultivating, that Mark does, like our partner Shahid does, and other, and the communities that we're looking to acquire as well, that turnover. We have an attendee asked for our OZ fund. The monthly dividends is 1%. With the remaining, it would target 12 to 16%. Could that keep growing rather than give us two investors each year? So the investments that we have for Shahid, for the most part, are fixed income investments. There are pros and cons to that, but the biggest pro is it's fixed, predictable income, regardless of where the occupancy is, which is insane to hear from someone like Mark, where our investments, we're looking for value-add investments. We want to stay above 90% to hit a certain IRR. But in these fixed income investments, where essentially the operator, Shahid, is not taking any of the property management fees, or is running very, is a very nimble operator. He's able to take more of that profit and bet it on himself, but guarantee the returns of the investment in that 12% to 60% range, which is very healthy regardless. And another question related, for TOSI investments, are they generally just dividend, or they're ones that, where we can have profit participation? Value add multifamily, value add senior living, it's all about creating value and selling it at a higher value at the end. There's more uncertainty. It's not fixed, it's not predictable, but it's a bet on creating value through through these efforts. And we will have, and we have lots of in the past, profit participation investments, and we'll be announcing soon as multifamily profit participation investment in the next few weeks. And we're also targeting several senior living investments that value as well. Mark, actually, can you explain to me? So I know what a value add multifamily is. It's increasing the rents. It's turning over the units. I've done it personally, where I've paint white, change the cabinets, put vinyl floors, put $2,000 to $5,000 of capex into your place, be able to increase rents by $200-300. That doesn't recoup that over 2.5 years, but also increase the NOI so that you can sell it for a higher amount. What's value add senior living?
Yeah, great question. Hey, you still have some of that in senior living as well. But at the end of the day, this is the great barrier to entry into the industry. Why I'm really excited about it. And I like fixing things. The people that I work with like fixing things. We like it when people are happy. And so, when you have this operations component, that, again, usually it's something with the culture, not always, but usually. So it's having the ability to observe, identify what the actual issues are, and then solve for those issues. Um, it might be as simple as finding a new executive director, but usually, again, it goes back to the culture. Goes to when you're on a tour. Let's say someone comes in on a tour, and they're looking for their mom and dad. And if you're walking around the community, no one makes eye contact. Maybe they take really great care, so care is not an issue there. But if they're not making eye contact when they move in, or sorry, when they're touring, well, the people touring may not, feel like home, right? Everyone's in their own world and they don't acknowledge you. So the sales and marketing process might be the only issue. When you train people to all make eye contact, be friendly, if everyone is in on the sales process, well, guess what? You're going to get more move-ins. So, I know we spent a lot of time talking about operational issues, but sales and marketing, again, it's a different component. I know I kind of skipped that slide earlier, but that's a huge part of value add in senior living as well.
And what is sales marketing for senior living? Is it, for multifamily, you go on Zillow ads, you put apartments.com, Craigslist, you put flyers around the neighborhood, you have referral. How do you get people to come into your nice community?
Well, let me just throw that slide up here. All right, so you can see here, hey, if you're a senior apartment, you're doing a lot of the same marketing as multifamily. Really, for all of these acuity types, you need to pay close attention to what it's doing online. You want to be ranked highly with your SEO. There's no excuse not to pay close attention to that for all of these asset types. But as you move to the higher acuity, families become involved. The sales process is longer at that point. You might, someone might come in to look, but then they need to bring in family, brothers and sisters and daughters and you name it. So it could be a 9-month or longer sales process. So it takes a lot of follow-up, a lot of education, a lot of content that you're providing. And the good operators pay close attention to this and do this well. When you're moving to assisted living, memory care, skilled nursing, hey, mailers actually work still in a lot of markets. When you're talking about older generations, maybe not baby boomers so much, but their parents. And then you do a lot of networking with doctors and placement agents. So it's really, again, you adding new layers of the sales and marketing process.
We have an attendee asked, senior living seems like a service-based industry with real estate appeal. How important is it to invest not only in the physical asset as much as the operator entity? So, and I'll let Mark answer the rest of this, but I think it's so interesting that, when you're investing in real estate, if there's a lot of hands-off real estate, and there's some, triple net retail shopping center. I have a few of those. Their businesses never call me about any issues because they have to resolve it themselves. And a triple net lease covers all of it. On the other extreme, you have senior living, which is very much tied hand in hand to operating. But would somebody invest in an operating entity? Is that something is that where the money is made, Mark?
Yeah, the money is made in operations. There's always the real estate component. You never get away from that, which is neat and fun, and that's why I got into it initially. But the operations is the fun part, and so being connected with the good operator is magnified much greater than simply multifamily. So I feel like there's a different sophistication level of the folks who are, property managers and running the communities. Yeah, but that's where the fun comes in.
And that's why for Tozy Capital, we're going deeper into that space. We have to know our operations. This is why we have marketing.
Yep.
Another question: Do you so this is about continuation of the question. Does that mean the return can keep growing? Will returns continue to grow rather than just principal? Example. So this potentially is a question from a previous around profit participation. I would invite you to check out some of our previous investments that have closed that are our multifamily ones. But we also will have a new presentation and a new investment. I believe, Mark, you're flying to Atlanta in a few days, next week or 2 weeks from now. And we'll have our full webinar to you guys in a few weeks. Any other questions, guys? I would love to, ask any questions on senior living. I think one of the things that, really attracted me to senior living is there's a lot of tailwinds, right? And there's a lot of sort of particularities in this industry, but ultimately it feels good to own a good, highly functioning community. It just feels really good. And when you can provide a home and a community for folks who have given so much to this country, for folks that you can imagine are your parents or your grandparents in the future or now, I feel really good about that investment. And the fact that it also cash flows very well and it creates a lot of value for us and our investors. I think that's win-win for everybody.
Yeah, hey, to that point, when restrictions are done post-pandemic, never hurts if you guys want to go secret shop a community. You can experience it firsthand.
Yeah, I'd love to invite. If anyone ever wants to come on our road trips or field trips, the last time we went to Michigan, we had a few investors come to check out some of our communities and experience it firsthand. I think there's no substitute for experiencing some of these things firsthand, especially something that you aren't familiar with. But with that, it's 5 minutes to the end of the hour. I thank you, Mark, for this very informative presentation. I hope everybody sees sort of the value of this link, Mark's experience as an operator and how important it is to run and asset manage, very high functioning communities. Mark, any last words?
Yeah, no, thanks a lot. Hey, I fell in love with this asset class and I'm here to stay. It's a lot of fun on all levels. And then, it's great to be here. So thank you, everybody.
Thanks, guys. Have a good night.